Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We have a crazy day, okay? It's going to be crazy. It's either going to be way in the green or we're going to have extreme volatility on our way down. Currently, the market is up 1.63%. It's the middle of the day. Okay, we have a whole bunch of more time to let this thing either have one of the best days of the year here at a 2-3% increase, or again, one of those crazy volatile days that we've had this last 2-3 weeks. Honestly, it's painful. It's been extremely painful. Today is the first day. I woke up early this morning, and normally we do not trade in the morning. That's typically a no-no in the industry. You want to trade towards the end of the day just because you have you're more likely to get less volatility in the prices of anything you buy, right? Because you don't have the whole day for news to come out, fluctuations to happen, etc. But I kind of figured today might be a green day, and I want to make that claim. I kind of figured that, so this morning we did buy. Now, I also want to make another claim, and this is part of the reason why we're different than other advisory firms. And this podcast, it is not really a part of our firm, I'll be honest. It's really not. It's separate because it's meant to be educational, and a lot of our listeners aren't clients, right? They want to do their own investing, and they want to just hear professionals' opinions on it. You're not going to find a financial advisor and CPA who really do that. And I say that because I've met thousands of them. They don't want to make claims. They don't want to make ownership of statements. They want everything to be vague and gray and middle. And I'm not going to be that way for you guys. That is one of the things that separates us. And so I want to make a claim that I think we're near the bottom here. 5,400 is as low as I think it's going to go. Right now it's at 5,617. Now, could I be wrong? Yes. And I will be wrong many times in the future. But the point is to be right and wrong enough times, but you're right on the way up. Okay? So there's two ways to think about it. Either I can be right more often than I'm wrong. So for example, last year, 10 out of the 11 stocks that we picked were killers, did great. One of them did really, really bad, Novo Nordisk. I think we recommended it at 135. I think at the end of the year it was at 85. Okay, that's a bad take. But guess what? We also picked SoundHound. We also picked Palantir. All of those positions quadrupled, both of those positions. And then Kava, that tripled. Okay, ServiceNow, that got up over $1,000 for the first time. There are these Costco, Bitcoin, these positions that we're talking about and these stocks to watch. You got to either be right more than you're wrong, or you have to be right on a few exponentially, meaning it's like the baseball term. If you hit 3 out of 10 times at bat, you're going to the Hall of Fame. You're a Hall of Fame batter, or 3.5 times. It's like that. So if we pick 10 stocks in the year 2000 and we hold them till 2025, but the 3 stocks we picked that were home runs, Apple, Nvidia, Microsoft. Okay, you pick those 3. I have, even in an equal weighted portfolio, I can't think of a scenario where you didn't absolutely hit it out of the park. So those are the 2 ways that picking or being right and being wrong works as far as being successful. Okay, so like Jim Cramer. Jim Cramer's wrong all the freaking time, all the time. But he was right once or twice really, really, really well. And it doesn't matter because now he's considered a genius and an expert. So what I'm saying with all that is I was thinking about value. And when you work with someone or when you do your own investments, they have to be able to make claims. And if they're wrong, they own it, right? And then they learn from it. But just none of these professionals or advisors make claims. None of them. Even our competition down the street, really successful firm in Solana Beach, they have a very, very prominent YouTube, 500,000 subscribers or followers or however YouTube does it. And they don't even manage their own money. It's all financial planning. Every video they do is educational on like, well, if you're, you need this life insurance, here are your 12 options. If you want help choosing, we'll do it for you. That's expensive hand holding. Not that we don't do that. We do that. We do that a lot, actually. However, everything for us is in-house. Those people down the road, they don't do the investment picking, but they get paid on the investments. Okay, meaning, hey, client X, come in, give us your $5 million. We'll help financially plan it for you to make sure it never runs out, make sure your beneficiaries or that you have a legacy for your beneficiaries. And then we'll use this third-party money manager. It's going to cost you an extra 0.5%, but at least you're knowing you're going to be getting taken care of because we represent you. So what they say with that is they manage the managers, quote unquote. I absolutely detest that model, and I have lots of good reason to, because that's how I started in the industry. And even when I was 23, being like, what? We don't actually do any of the investments? That doesn't make any sense to me. So that's why we're different than other people. And this isn't to, I'm not trying to make a plug for our firm, because the podcast honestly is different than our firm. It is different. This podcast, a lot of our listeners aren't clients. Some of them are, but a lot aren't, because they want to do their own investments, right? And they want to just be empowered. That's why this is educational. When I started this 3-4 years ago, and now Brandon's come on in the last year and really just killed it with the value, this was meant to provide merit and rapport, meaning I wanted to have something I could lean on and be like, hey, look, we actually have this really successful financial podcast that proves we're experts. And the only real way I can think of doing that sincerely is by making claims. Okay, the claims like, I think 5,400 is the floor. We actually might be at it right now. Hey, that's why I bought this morning. That's why I bought VUG and a couple of individual positions for some clients. Again, all I have to do is be right more than I'm wrong, or be right exponentially in a few things. Okay. If you have an advisor who doesn't do that for you, who doesn't make claims, doesn't own their opinions, you're paying for a very expensive hand holder. Okay. And in their head, there's two things. And I mean this, they're either criminally ignorant or they're evil. Okay. And I use evil not in a hyperbolic sense. They're taking advantage of people when they're not doing the very best for people. And when you think about financial planning or even just financial management, there's such a window for success. There really is. So you can be on the lower half of that window and the client could still be happy, but you would never know that you could be on the other side absolutely killing it. Okay, absolutely killing it. So I've ranted enough on that. I just wanted to talk about, we make claims here. I'm okay with being wrong, because then I can assess it, analyze it, and get better over time. And again, it's not about being right every single time. Nobody can do that. Okay. But when I work with people, my real value is two things outside of just being a consultant for your financial health and wealth. And then obviously Brandon does taxes, which is in and of itself is an extreme asset, especially for someone as great at it as Brandon is. My real value is to lose less when times are down, okay, or make more when times are great. And last year, times were great. And guess what? Every single one of our clients, very, very happy because we did better. Now, is that going to happen every year? No, it's not. It's not going to happen all the time, but that is the goal. And when you trend towards that goal, it's like, what do they say? Shoot for the stars and you'll land on the moon. Okay. So I just want to, for those people who have financial advisors or financial planners, you need to know that you're on the, I just would hate it if you're that gray area window of success, if you're on the bottom half of it. I would love for you to be on the top half where you're absolutely killing it. And it's possible. You just need a little bit of conviction. You need someone who likes learning and likes studying the industry. And a lot of these people don't. They're just salesmen. Okay, I've been ranting. I rant every episode. It's part of the gig. I want to read the news for you guys. Let me go ahead and do that. Where is my... Here we go. Okay. Here is the midday market update. And if we're on the West Coast, I mean, this is the beginning of the day for us, but out there it's noon. Stocks were sharply higher midday trading Friday, one day after the S&P tumbled into correction for the first time since 2023, amid investors' concerns about the impact of tariffs and the outlook for the U.S. economy. The S&P 500 and tech-heavy NASDAQ composite were up 1.9% and 2.4% respectively. While the Dow Jones Industrial Average rose 1.4%, stocks are coming off steep losses Thursday, putting the S&P 500 and NASDAQ on track to post their fourth straight week of declines. Coming into Friday's session, the S&P 500 had shed 10.1% since hitting the all-time highs just over 3 weeks ago. Think about that, guys. 3 weeks ago, we were at all-time highs. Okay? Talk about fear. Nothing in 3 weeks has changed fundamentally about the stock market or the economy. Okay? These things take time, but the stock market is future looking. And when they hear the tariff news and the war news and they get scared and money pulls out, it's a liquidation event. It is actually not a fundamental change of the stock market or company story. Okay. So S&P 500 had shed 10.1% since hitting its all-time high just 3 weeks ago, as President Trump's move to impose tariffs have heightened fears that inflation could re-accelerate and economic growth could stall. Stocks briefly pulled back from their early session highs this morning after closely watching consumer sentiment data was weaker than expected. The University of Michigan's index of consumer sentiment came in at 10.5%, below the February reading, and was down 27% from a year ago, as consumers fret about political and economic uncertainty. Okay, I'm actually going to stop it there because I do want to talk about that. That Michigan Index consumer sentiment, I did a little bit of research. That's all done online now, and it tends to be a very politically leaning index, consumer price or consumer sentiment index. So what do I mean by that? I mean that one side who tends to do the survey. And so you're required to put your political affiliation there, and it's like overwhelmingly blue and Democrat. And there's nothing wrong with that. I'm not trying to pick a side. I do believe that there is political, influence, I guess, political influence on this Michigan consumer sentiment. It's not actually real of the entire country. So what I mean by that is there's old people who voted Democrat who have all day to do nothing. And so obviously they're filling out these surveys. And one of them happens to be this very important consumer sentiment index that we use frequently. But it just so happened that these most recent ones, it seemed to be very politically influenced. And so it's to be taken with a grain of salt about people's fear of the economy. Look, I would tell you this. The stock market is going to go up or down. It's going to go up or down. But the great thing is, history has told us, out of every 6 years, 5 of those is a bull market. And one of those, 10 months, is a bear market. Okay, a bear market is a 20% decline in the stock market price, the S&P 500 price. Excuse me. I don't think we're there. And even if we did go, I bet it's a blip. I bet it doesn't last 10 months. So all of this fear of these tariffs and this doom thinking, it's not real. Okay, and I'm putting my money where my mouth is by saying that and by doing it because I'm buying the dip. And that's just one thing I really want to emphasize here. You need to have conviction and belief in what you're saying and what you're doing. And if you don't know why you're invested in something, or you're scared and you're just like, oh, I guess I'll just trust my financial advisor, you need a different financial advisor. I have called maybe 30 of our top clients this last week just to say, hey, we're checking in. I know the market's been tumultuous and volatile, and we want to take your temperature. And we actually think there's going to be a buying period here. And we'd love to take your thoughts down on whether or not you'd like us to make an investment where we think the bottom is. Now, finding the bottom is very difficult. But if you're close, that could be immense amount of gains. Think about it. We bought the S&P 500 this morning. If it's down 10% and in July it goes back to where it was, clients just got 10% on a portion of their money. That is why when stocks are down, it is a discount. Good stocks are at a discount right now. Okay, the market is at a discount right now. You should get excited. And we are, but at the same time, I lose sleep over it because I know clients are worried. And my biggest priority isn't to make people money. It's to make them feel and to actually support them that their money is in the right hands and is doing the right things. Okay, that's almost hard to do in the present moment. In the past, you can look at it and be like, dang, that was a good job. Or you could say, dang, that was a bad job. But future looking is difficult, and present thinking is even more difficult. So I just want to encourage you guys, remember, have a plan, stick to it, have conviction, and believe in the process. Also believe 5 out of 6 years, bull market on average. Okay? Bear markets last about 10 months. Bull markets last anywhere between 3 to 5 years. So think about that when you have concern. All right, guys, I am done. The market, let's look at what the market's at right now. Okay, it's at 5,608. So we'll see what it does today, okay? We'll be back next week. Guys, as always, invest early, invest often. We'll see you next time.